You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. How are you doing this morning? This week, I'm going to get a little bit closer to what's going on with the stock market with a quick series of 3 days. Today, we're going to talk about stocks that are up double digits since the beginning of the year, which is kind of crazy. So we have to talk about those. And then tomorrow on Wednesday, we're going to talk about safe stocks in this volatile market. So companies that are more stable. And we're going to end up the series with top opportunities in this market correction on Thursday. So want to make sure that you subscribe to The Moose and the Loose to not miss those 3 episodes. I think you're going to like it, and we're going to talk about a lot of stocks. So today, let's get on with, the market is crazy. The TSX is not doing that bad, actually, though. Minus about 3.5, minus 4, something like that, depending on the day, because these days, the market could go up and down by 1-2% easily. But anyways, before the market opens yesterday morning, it was roughly minus down 3.8%, 3.5%, including the dividend. So a lot better than our fellow Americans. However, we do have a lot of companies that are up double digits so far this year, kind of sending us a signal. So the first signal we see, of course, that was not a surprise, but gold is doing awesome. Gold is a bet on fear. I'm not a big fan of the yellow metal, but I've always been quite transparent about that. Whenever you fear that the market's going to crash, chances are gold's going to go up. And then there you go, you got gold. I know that a lot of investors that are interested into those commodities will also point out that silver is doing great too. I'm not an expert there. I just want to highlight that. And 2 companies that caught my attention was Agnico Eagle, AEM. AEM, man, on fire, up 46% since the beginning of the year. If you look at more than a year now, it's more than double the stock price over the past 12, 18 months. So definitely this one is on fire. Not necessarily a stock that I would go for, mostly because this is the type of company that will do incredibly well when there's a gold rush, if I could put it that way, when gold is going up. This is the type of company that is going to do incredibly well. But when gold goes down, well, most of the time they hold on to their dividend increase, or they even just got their dividend. They did that a lot in the past, but that's more part of their business model. It's not really related about they're good or a bad company. It's just to understand when your business is dependent on a commodity price, you have no control over it. So of course, the smart decision to make is to adjust your budget according to what's going on, right? So that totally makes sense, but that's not for me. What I would prefer, though, is to invest in a company like Franco-Nevada, which I did with a small amount of money in my corporation. FNV, Franco-Nevada is up 37%. This one was highlighted at Dividend Stocks Rocks a few months ago, though, as a great buy. So definitely doing well right now. Kind of obvious, though. You're thinking that the market is going to be quite volatile, a lot of uncertainties, and then you have a company like Franco-Nevada with $0 in long-term debt. Yeah, $0, as in zero, I'm debt free and I'm a business, and they operate a royalty business, so they're just making money when mining companies are extracting gold from their assets. So very smart business model, doing great. One of the rare gold related company that is increasing its dividend year over year for several years now. Didn't cut it yet. I mean, I don't think it's going to happen. So they've been quite diligent with their dividend growth policy as well. So yeah, definitely an interesting one with Franco-Nevada. But yeah, as long as we have market volatility, gold is going to be the high standard right now. Moving on to a few stocks that I've talked about in the past. I'm going to go a little bit quicker on TerraVest Industries. TVK up 18% year to date. Another one that was I was surprised. I was surprised because TerraVest Industries is in growth mode right now. They are growing aggressively with a lot of acquisitions. It's doing great for their business model, but it's still a relatively small capitalization. So usually small caps are not doing that great when the market goes down. This one keeps on entertaining the market with their acquisition and just telling the market sending a strong signal that yes, it is still the time for us to grow, which I mean, quite rare these days. So definitely explaining why the company is doing so well in the market. Another one, and I've discussed that actually yesterday, Dollarama. The stock is up 15%. This one, I mean, it's doing great when the economy is doing great. I mean, it's doing great when also we expect a recession. It's like kind of like the all weather company these days. Is it going to last forever? I don't know, but right now doing incredibly great, growing by increasing the number of stores. Now they're going after Australian stores and making an acquisition over there, bringing their own playbook. So it's going to be interesting story to follow, but then it has like a perfect dividend triangle. So revenue, earnings, dividend increasing all the time. Quite interesting as well to have on your list to do your due diligence. Another one that made an amazing comeback, Alta Gas, ALA.TO, also up 15%. A big comeback from the time it cut its dividend in 2018. So the company made a large acquisition back then. WGL got into a lot of debt for that natural gas distribution business, and then ended up cutting their dividend in 2018, focusing on becoming leaner, having like a better business model, generating more cash flow. And here we are today. The company's doing great. It has that gas distribution in the US. They also have pipelines, which is a fee-based business model in Canada. So that is doing quite well on both sides of the borders, making more money on the US right now, and generates a stable cash flow. The only thing I'm not too sure about, though, is the debt is still relatively high in the sense that it hasn't dropped that much since 2018. So yes, of course, cash flow, revenue, and earnings are doing better, but the debt has not been paid off. So just have to keep that in mind. But so far this year, doing great, and where Canada is looking for other partners for its natural gas, well, Alta Gas is like well positioned to benefit from anything that could come out of that. So that could be another one that could be interesting to follow. I just want to make a quick pause and talk about some US stocks. I rarely do that because I want to keep this this podcast fully Canadian, but I have to highlight that the US healthcare sector is doing incredibly great right now. We have a lot of double-digit return since the beginning of the year, mostly for companies that are taking care of the healthcare services. So we're talking about like Elevance, United Health, so ELV and UNH. They're up 20 and 19%. They have a very similar business model where they are providing insurance services in the US. You have McKesson up 21% and HCA Healthcare running hospitals up 11%. So in a market on the other side, like the S&P 500 is like down roughly double, like about like 10%, a little bit more than 10% actually. It's quite impressive to see companies being up like 19-20% for a lot of those, and then HCA at 11. So just want to highlight those. If you want to look into healthcare right now, it's kind of crazy. Maybe the money has passed though. Maybe the good money has passed. That's always unfortunate when you look at it. But keep in mind, if they're doing well right now, we're only talking about like 4 months in the actually 3 months that we completed. We are in the 4th month of the year, so there's a lot of time to go still. Some of them are in comeback mode. Some of them are in full growth mode. So like companies like Dollarama and TerraVest, their story is being written over the past few years, keeps on growing. So quite interesting stocks to put on your list. Again, as usual, it's not buy or sell recommendation, but I just wanted to highlight some positive good stocks right now in the market. Tomorrow, we're going to talk about companies that have like a little bit more of a stable business model, which maybe the stock price will fluctuate, but the actual business will continue to do well and will not really be affected by the current recession or like expectations of a recession, because we're not officially there yet. We're always looking backward on that anyways. So yeah, tomorrow we're going to talk about that. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.